Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some Bulletin board hero stocks on Wednesday, July the 23rd. I'm starting off with Kea Petroleum, where it looks as though we've got a decent bull flag breakout. The positivity comes here from the extended RSI above 50 earlier this month. The overall January rising trend channel with its implied 4.75 pence target, and the way that yesterday we had the price action almost wholly above the 200-day line at 1.87 pence. The implication is that while there's no end of day close back below the main moving average here, we should see the shares head back towards April resistance through 3 pence and the implied best case scenario target towards 5 pence over the next 1 to 2 months. Also in focus at the moment is Range Resources, where there's been a bit of jiggery pokery in terms of the price action. It looks as though that there's a floor, there's a rising trend channel from April. The floor of the channel yesterday's low at 1.8 pence, and that gives us a setup to chase the shares higher back to the best levels of the month, above 2.5 pence and possibly as high as a 2.75 pence target over the next month or so. Only back below really the 50-day moving average at this stage would be outright negative for the shares, but it does look as though they've done enough now to shake the bulls out, or weak bulls out, before heading higher again, the RSI remaining above neutral 50 at 52. Another situation in focus here is Stratex International. Here it looks like we've also got a sort of bull flag formation here around the 200-day moving average. In this case, it's at 3.74 pence. You might want to see an end of day close above the 200-day line, or even the recent high at 4 pence before going long again at this point. But it does, as I said, look as though the setup is in place here. The risk, of course, is that we just hit the 200-day line, or we've hit it already, and then we head back down again. But while there's no end of day close back below the 10-day moving average at 3.2 pence, it looks like further upside could be on the way here. Best case scenario is the top of a rising trend channel from this time last year through 6 pence over the next 1 to 2 months. Finally, a more problematic situation, that's Chariot oil and gas. Looks as though initially the support, 1-year support, we're back at that level towards 15 pence, but there is a risk that if we see an end of day close back below this main support level, there could be downside of another 2 or 3 pence in Chariot shares, possibly moving towards the trend line I'm drawing there as a worst case scenario. The positives at the moment really are the way that obviously we are at the major support zone, and also that the shares after recent falls are very oversold. The RSI is now down to 24, which is about the lowest it's been since the beginning of last year. That's it from me. More updates at spreadbetmagazine.com.